What's going on? Welcome back to Trending Stocks. Today we're going to talk about Virgin Galactic, ticker is SPCE. I want to go over some of the current data points, talking what's influencing the stock price, plus if it's justified or not, and then go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that, let's get right to it. So currently it is up 8.12%, a hell of a day. $1.93 the low, 214 is the high, and 12.99 million shares have been traded. 11.9 is the average. And we're just about to head into power hour shortly. At the time of doing this video, no SEC filings, no press releases, nothing like that. There was data, so ADP non-farm employment came out. So 103,000 was the actual, 130,000 was the forecast. So as a result of that poor data, people are automatically now assuming that the Feds are going to have no other choice but to cut rates in the foreseeable future. So once again, it's kind of that debate that's been going on for the greater part of the week. I'm going to play a video in a second just kind of talking on this, but starting off with data points. More specifically, options. $176,000 in calls being purchased versus 61,000 in puts. So based on this information, people are anticipating for Virgin to continue to trend up. And looking at this, so this shows all the specific calls, the strike prices, expiry dates, everything that you need to know. Based on this, it is anticipated to be above around 250 by the end of next week. So clearly some people are anticipating the momentum to continue. Looking at puts, it is anticipated to be sub $2. So clearly the risk versus reward is definitely there based on the options, but no matter what, when it comes to options, it doesn't move the stock price. It is just merely a sentiment. So just be aware that there has been no recent analyst rating. So the last one was about 14 days ago by Morgan Stanley. Christine, if that's saying that right, 58% success rating and $1.75 price target. So once again, analysts aren't necessarily warming up to Virgin as of yet. But who knows? Let me know your thoughts on that. Once maybe there might be more solidified data that the Feds are going to be actually cutting rates potentially sooner rather than later, then analysts might start to give a little bit more positive ratings. But once again, the next big thing that is data point wise is coming out later this week. So as you can kind of see on Friday, if I remember correctly, so there is non-farm payroll. So once again, I think very high expectations of 180,000. So if it is once again lower significantly than the forecast, then I think it is fair to assume that the Feds might in fact cut the rates. So once again, let me know your thoughts on that. If you are looking for a lot of good compiled information, such as upcoming analyst forecasts, ratings, everything under the sun, take a look at Interactive Brokers for all this information to be completely free. So quickly bouncing over to shorts, let's go over what they are doing. So right now, shorts are increasing about 585.98 thousand. 21.37% of the free float is being shorted. 78.33 million shares overall are being shorted. Through the Interactive Broker, short availability does indicate that there's around 200,000 shares available to be shorted, and cost of borrow average is 1.69%. So kind of interesting stuff, but the fact that they are increasing on a green day, it shows that they feel that's not justified, and that most likely there won't be any cuts, because like I said, that's kind of been the debate for the greater part of the week. Thursday and Friday last week, a lot of optimism about cutting rates. I think Monday and Tuesday, more of a realization that maybe not, and so it's kind of flip-flopping quite significantly. So shorts are betting that there won't be any rates, as you can kind of tell based on this. But no matter what, when it comes to this, I'm just only using this as a benchmark, not saying Virgin is going to be a short squeeze play by any means. So just take that with a grain of salt. But before I go over some of the technicals, I just wanted to play this video. This is by Schwab's CEO, just talking on the Feds and interest rates. And I do find that a lot of people might get some good value out of what is said here. So once again, stay tuned for technicals.
He recommends somewhat more conservative portfolio. Joining us now, Schwab Asset Management CEO and CIO, Omar Aguiar. Hello, Omar. Good to see you as always. So what's your assessment of the market's current thinking that we might be able to thread this needle, a resilient economy, lower rates, maybe the Fed eases next year, and perhaps we can sidestep recession for a while?
Yeah, well, what a difference, 12 months can make of what we were discussing a year ago to what we're discussing now, where, clearly the soft landing scenario seems to be the most plausible case among everything. A year ago, we were all talking about recession. We were all talking about the fact that inflation was really high and growing. We were talking about, how the labor market was so hot that was fueling significant amount of imbalance.
Just to add though, I do feel that people are still talking about recessions only because, especially the slowing data such as today, does signal that a recession might be potentially coming. So the Feds, this is why there's talk that the Feds might be cutting rates just to avoid a recession. So a little bit more of an imbalance. So I don't really agree with that aspect, but I'll continue on.
In terms of supply and demand, et cetera, et cetera. So as we think about where we are now, it's almost seeing exactly what the Fed, wanted to have. It's almost like the perfect Goldilocks scenario for what they have been working throughout the year. You see the economic, resiliency of the U.S. is still growing at above trend. They see wage growth, going down. They see inflation moving to the right place, and they see the effects of, the higher interest rates really just affecting the areas of the economy that they wanted to affect. Consumers is still doing what they're doing. Corporations in the credit market is still pretty solid. So overall, when you put the picture together, we seem to be navigating to these rolling recoveries into a more, we may avoid the recession and stay in that soft landing.
Okay, so basically what he's kind of saying is that a lot of stocks that are heavily reliant on debt, those are the ones that are poised to go up, such as Virgin Galactic. But then again, I'm not a financial advisor. You guys always do your own due diligence. Especially if you kind of zoom out looking at Virgin though, it has been suppressed significantly. So once again, just looking on some of the technicals, it is trying to transition into the higher percentile of the Bollinger Band. It's kind of failing a little bit right now, but if it does, then I do feel that easily $3 could be at least touched in the short term. But just talking on some support and resistance points that you need to know. So going over some of the technicals, looking at the 1 day. So with that at $2.06, it is between this P and this R1. So $2.36 is going to be that next strong resistance that you need to watch for. And then 201, which it kind of did temporarily break, but that is going to be the next strong support that you want to watch to hold. So like I said, I think a lot of the data points behind the scenes is mixed. You do have some people very doubtful about that. But one turning point would be this upcoming Friday about the non-farm payroll. And if that is very, very bad for data, then yes, things could definitely turn out for the better. So let me know your thoughts on that in the comments below. And have you been buying? Have you been selling? What have you been doing with Virgin? Based on the momentum indicator, shows number of retail investors have been getting in today. So that's kind of a positive thing. Stochastic was very, I guess, overbought. You can consider it that way. It cooled off quite significantly, so kind of went both extremes. So Virgin, based on the technicals, are oddly the most optimistic of all the data points I did bring up. So potentially, if that negative data does come out, then Virgin could in fact go up as a result. So let me know your thoughts. Do you think that things are going to get better for Virgin, or do you think it's going to retrace back down to 52-week and all-time lows, which is ultimately around $1.38? Kind of extreme, but what's your viewpoint on Virgin? Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. And one final thing I just wanted to share with you, take advantage of this promo with Moomoo. So this is only up until December the 31st. Sign up for an account with Moomoo, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000. So take advantage of that. Link in the description below and also the comments. With all that said, appreciate all of you watching.